Hello, investors and traders, and welcome to the Midweek Report. I'm AJ Monte, and this is a daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. Now, if you had a chance to watch my weekly market report that went out last Friday, you'll know that my upside targets are still in force. As I zoom in here, you can see that the markets are still trying very hard to bounce off of this support level here, and we have hammer candles right there, which are bullish 80% of the time. In addition to that, if you look down below right here, as I magnify that, you see the drop in the volume bar right there. Again, I repeat over and over again because repetition is the best teacher. When you have a drop in volume on the way down, that's telling us that the sellers are losing momentum. And that's generally what the buyers look for before they actually start buying. So I'm still looking for a pivot higher. This moving average is creeping lower, so that will act as a resistance area. But a lot of times when you have such a wide divergence from the moving average like this, we call that the rubber band effect. When the price starts to snap back to that moving average, it tends to go a little bit beyond that and more or less like a pendulum before pivoting lower and coming back to that moving average again. So again, I still have upside targets. I'm looking for that bounce, and then on Friday, we'll decide whether or not we're going to adjust those targets or keep them in place. Now, looking at IWM, you can see the same thing. It's going to be more or less a repeat performance of each market. You can see down below, we have a key support level down here on IWM that's holding quite nicely. We have that wide divergence from the moving average again. We have the drop in volume on the way down, bullish. We have an oversold condition on the stochastic. And you can see we have a positive divergence here on the CCI as the CCI is crossing over that green line, which is the buy signal. You see that? That minus 100 mark is what we look for. So if the CCI goes below minus 100, it's oversold, but when it crosses back above it, that's where the buy signal is generated. Again, for those who are looking for a really good indicator to follow, that's my favorite, the CCI, the Commodity Channel Index. Looking at QQQ, you can see again, same thing. We have a pivot here now. We have a higher low, higher high. The Qs were up a little bit over 1% today, but look at that drop in volume. That's quite significant. Down below, we're still about 8 points, almost 9 points away. See the blue bubble there from a buy signal. The stochastic is getting ready to pivot up. We have that wide divergence, the whole shebang. So I'm still looking for upside on the Qs as well. Looking at the SPY, which is the S&P 500 ETF, we got the same thing. We've got a half signal here, a higher low, but a lower high. Half signal is more or less half of a pivot point. If we had gotten a higher high today, that would have been a full-fledged pivot. But again, we still have that wide divergence. We have the drop in volume on the way down, oversold on the stochastic down here, and we have a pivot in the CCI about to cross over that green line, which will again give us a buy signal. Now, one of the most interesting ones to look at here is the VIX. And you can see, boy, talk about a pivot point. There you got it. And we have these long shadows on Monday and Tuesday. The long shadows above the candles are bearish. You can see when we have long shadows on top of those candles, the VIX tends to drop shortly thereafter. So I am expecting the VIX to drop here. We'll have to see if it gets down all the way to my target down here, but we'll have to see, like I said. And we could get a snap back to that moving average and then a little bit more of that pendulum effect to get us down to that target, which, by the way, is still in place at 1851. Look at that sell signal on the CCI. And look at that, as I magnify that. That blue line, which is the percent K, is in fact crossing below the red line, which is the percent D. So keep an eye on that VIX. Folks, thank you so much. Look at this. We've got views are up 22% because of you, because of your liking our channel, commenting on our channel, subscribing, That gets us into the menu. So we really do appreciate those comments, especially and all the likes, because we're building the audience. We are doing it very steadily. We haven't hit critical mass, viral growth, at least not yet. But as soon as that happens, boy, you're going to have more and more people following the technical signals, so that when those buy signals show up, there's going to be more people reacting to those, which makes them much more effective. Tonight from 6 to 7, we have the rapid fire stock analysis session. I'll be going over at least 50 stocks. Stay tuned. If you'd like to try our membership, just check the description box below, and we'll talk to you on the next video. So long.